Welcome back, everyone, to Grab Your Keys. This is part 2 of our conversation with Faye and Bernadette. If you missed part 1, make sure to go back and give it a listen before diving into today's episode. We picked right up where we left off with more great insights and discussions that you won't want to miss. So let's get started.
Okay, let's flip it to downsizers because that's the other end of our spectrum. Which we love working with downsizers. We do a ton of 55
yeah, you
plus.
do. You're great at it.
Those guys are, they're our tribe. They're our people.
Yes.
I'm going to come back to one of the questions I asked for the first time buyers and now apply it to our downsizers.
Right.
As a person who has co-signed for multiple college loans, if I'm looking to buy first before I sell the house I've been in for 30 years, but I have co-signed for 3, 4, whatever college students, and those are still out there, obviously. How does that impact me getting a mortgage?
Great question. It matters if you pay that debt or if your child that co-signed for the loan pays the debt.
Oh.
If we can illustrate that the child pays the debt and illustrate 12 months in coming out of their checking account, I don't need to count it on you at all.
Which is interesting because right now, since they're deferred, how does that work? Because like some of my kids are not because they're deferred, so there's no way of proving that. So then it still falls back on me.
It falls back on you, and then we call the debtor, whoever the student loan is with, get to tell them that it's the dollar, and then we use $1.
So $1 for me then.
Yes.
So it doesn't really impact me.
It would be $1 for
way.
them also, but yes.
Okay.
For the whole loan, we would figure that out. But you need a good lender who's going to figure that out.
I mean, absolutely. Mm-hmm. Absolutely. Okay, that's great.
Actually, and we haven't really had any buyers that it's affected. Okay. I mean, we've done a lot of downsizing buyers, and that hasn't come up as much where they haven't qualified with that payment also. So we've thrown the payment, whatever the payment is, the half or the 1 point, it would probably most likely be 1%. And we have just qualified it with them. So if they didn't qualify with it is where we would start asking questions.
Yeah. All right. Awesome. That's actually great information for me. Tax implications or benefits to using a bridge loan, which I know you don't call it that. I forget what you call it, or a HELOC when transitioning from a larger to a smaller home. I know you have all kinds of conversations you have when you come to our open houses with our 55 plus buyers.
Right.
And they're so confused.
Right. So it is confusing. It's confusing because these homeowners, when they're looking to change communities and downsize, most likely have a lot of equity in their house right now because most 53% have more than 53% of people who have homes in the United States have more than 50% equity in their houses. Mm-hmm. So they either have a home equity or they're paying, or they've paid their debt down a lot. They have a big chunk of equity that they want to put to this next house. So there's many ways, and when I'm talking to them, I say, do we want to pull the home equity out? Do we want to refinance and pull cash out? Do we want to put a loan on the new house and then pay down to get and have that loan recast? So I go through all of those options to see what the best option is for the buyers in their scenario. Are they going to hold a mortgage when all's said and done? If the answer is yes, I'll tell them to put a mortgage on the house, see if we can use any money that they have in their assets that they can repay themselves, and then pay the mortgage down to where they want it to be and have that mortgage recast for about $400 or $500 after 6 months after they've made 6 mortgage payments. That's a new regulation that happened in the past year. So it's really going to be what's their personal preference, and it's up to me, just like it's up to you guys, to see what their personal preference is in buying, house A or B. Mm-hmm. I have to talk to them and see how they're feeling. I know I called you the other day and I said, I don't think that Mr. and Mrs. Smith is going to be ready for what I'm going to tell them, but I'm going to give it to them tomorrow and then I'm going to let them sit on it. And it was so funny because what I didn't think that they were going to be comfortable with, they were comfortable with. So you have to give your buyers all the options because you don't know what they're going to be comfortable with. So I think that it's my job to tell everybody what their options are and have them pick from, you know, are you going to use your home equity? Are you going to, you know, use your assets? Are you going to put a mortgage on the house? How's that going to work? And sometimes I have to say, look, I'm not the person for you. You need to sell your house and then just pay cash for that house.
And you have told our clients that.
Because they're not comfortable. So,
Yep.
and I know that it's really hard for them. Like, what comes first, the chicken or the egg? Do I sell the house? Do I buy the house? We allow people to have options who want to buy the house and then sell their house next.
Yep.
And we make them feel comfortable with that. And we're blessed, even though it's a banana split market, we're blessed with that when a house comes on the market. Right now, it's most likely going to sell. It's not going to sit for 6 months because the buyer has to take the risk and be able to carry both houses.
Yep.
So is there tax implication? There's not tax implication on any of it. It's just that they'll be able to write off the debt of both.
Okay.
I think as realtors, a huge part of our job is providing information and people who can provide information so that they can make their own choices. So what you're saying resonates with us because that's exactly what we do. We're not brokers, we're real estate agents, but we broker contacts.
Right.
And finding them the things that they need to know.
Well, I think that
providing them
we're
choice.
networkers.
Yeah.
And I think that's one of the things I love. You know, I was in Philadelphia all day yesterday, and a person I was meeting with said, you know, we just moved here from New York, and my wife just has no place to get her hair and nails done. And I was like, I got her. Mm-hmm. Like, who would think that your mortgage person would get it? And I was like, here, this is where she's gonna go. This is who she's gonna talk to. And we're gonna totally handle this. And they were like, I'm writing this down because you don't know how much my wife is gonna be happy that she has this. And
doctors,
just those
dentists, and hairdressers.
I know, and people don't realize like that we're networkers. Like that's what we do. We like to provide contact, and we like to make things comfortable for them.
Well, and years ago when I was in a different, but it was still sales oriented, I remember the person who was mentoring me said, win-win. Everything has to be a win-win. And if I can't help you, I will never hurt you.
Right.
Right? And so that's what I'm hearing. Like, that's how we all work. It's like, it has to be winning on both sides. We are going to be your fiduciary. We're going to do everything we can to help you. And if we can't,
right.
We're walking
and if I
away.
don't do a loan, I'm going to tell the person this is the best loan for you to be in. I don't do that loan. I'm going to give you somewhere else to get it.
Exactly.
And then I call the person and say, hey, I'm sending a person to you. They are amazing. This is the reason I'm sending them to you. You're going to be working with one of my realtors. They're a top realtor of mine. Please keep me in the loop. And if anything happens, you call me first.
Yep.
And then just let's find a solution for what happens. And they respect that. They like it. They don't take my contact, which is amazing. And I wouldn't refer to them if they did.
Absolutely.
Yeah.
If you had to describe the mortgage process in 3 words, what would they be?
Wow, she's really putting you on the spot with
painful.
that.
Okay, fair.
Fun.
Okay.
Intriguing.
All right, painful, fun, intriguing. Those are good. I think it's.
But that's the way I feel.
Pain and fun don't go together.
Well, I find it fun. I find it when I have a challenging deal. I find it fun.
Okay, good.
You do, and there is a little pain because until you get to the solution, you're still working through the problem.
Right, and I have
no
to,
pain, no gain.
Right, and you really have to be smart in this industry to make it work. And I don't know that I felt I was smart in school, if that makes sense.
Book
so
smart.
I'm not. I feel like I wasn't like the top of my class in school. I do feel that I'm pretty smart in mortgage. Like
you found your vocation.
I
Once
found I found what I love,
exactly.
and I know, and I work at it, and I love finding the solution to the problem. So I'm a problem solver, which is painful, which is why I say pain, no gain, but it's fun. I love everything being different every single day, and I find it intriguing because I love meeting new people, and I like the intrigue of it.
Right. And you have a great support staff. I mean, your office are phenomenal.
My
as
office
far
is
as
amazing. Yeah.
supporting you and the clients
And we make it
that
fun.
have. Yeah.
We make it fun here.
Yeah.
Okay.
And I'm going to go back to fun for a second. I dealt with a lot of people in my career, lots of different realtors. And when I got back into selling mortgages in 2019, I challenged myself to not do business with anyone who I didn't like. Because I did business a lot with people I didn't like, who were mean, who were not nice, and I really don't do business with people who I don't like. And I think that makes it fun.
Yeah.
But you have to be at a place where you can decide that that's your choice. And then also saying no to working with people is also your choice. So that takes age, but that's also part of the pain and the intrigue and the fun.
It is. And it speaks back to your emotional intelligence, which everybody, like, that's kind of been a hot topic.
Right.
And, emotional intelligence lets you know that your relationships, personal relationships, can be your greatest source of angst and anxiety and stress, or your greatest source of joy.
Correct.
So you're choosing joy in your personal and business relationships.
That is exactly right.
Yeah.
It's just not worth it.
It takes so much of your energy, thought process to
I
have
said when I
somebody
see
who's
your
not
name,
nice.
when I see your name on the phone, I want to say, "Hey, how are you? What's up?" I don't want to say, "Oh my God, they're calling me." Like, that truly is. And if I feel that way, we won't work together in the near future. Like, for the most part,
Ditto.
like if I'm going to answer my phone on Friday night and Saturday and Sunday, I want to know it's somebody who I want to do business with and who I care about.
And if we're calling you on Friday night or Saturday, it's because we want the person to answer the phone, because that's what our client is expecting. And right.
So, yeah.
What's one myth about mortgage lenders that drives you crazy?
Yeah. That we're car salesmen. It drives me crazy.
Yeah, same.
It drives me crazy. But I can also see and smell a mortgage person a mile away. So, if I go into a group, I'm like, they're a mortgage person, they're a mortgage person, they're a mortgage person. So there is a distinct, and I would say that I also probably smell and look that way too, but I don't act that way. And so I don't feel that a lot. I think that we have changed to be more empathetic in the industry, but you still have some people who are just doing it for the money.
Like, who you work with matters, right?
Who you work with matters.
Always.
Yeah.
As a salesperson, it's very difficult to tread that line. I had this thought process last week because somebody in my neighborhood sold listed a house, and it wasn't through me, which is very upsetting. And I know the person, not well, but I know them, and they know I was a realtor, but I didn't get an opportunity to speak to them. And I'm thinking, I said, how do you relay to somebody that you are in the top 2-3% in your office and in the county without being a pushy salesperson?
Great idea.
Yes.
Great question.
So it is tough to
sometimes
tell
you
people.
just tell people.
Yeah, I know.
Sometimes you just can't help it.
You feel
and
the
I
humility and say,
sometimes
"I
I do say it, but most of the time when I'm losing a deal, and it still makes me lose the deal, it's having enough deals in your back pocket and in knowing that they're coming in the future to not worry about that one deal.
Absolutely.
And to know that one deal is just not worth the pain of that. And I think that allows you to move forward. But I know years ago I went to get my toes done, and there was like 5 people around me, and the nail technician said, like, "What do you do?" And I remember being embarrassed to say I was a mortgage person.
Oh.
And I was like, that really sucks. And I mean, it was in 2009, I want to say, when all hell was breaking loose. But I wasn't part of the muck. I wasn't part of what made there be a crash. I didn't do those bad loans. I wasn't part of the B paper lending. I was always part of A paper lending. But they didn't know that, and I couldn't explain that. And I remember being like, so like really quiet so nobody else heard. But because of the regulation and because of Dodd-Frank, we now have become all licensed for the most part, or registered. We have some sort of being. Back in the 1990s, you didn't have to have anything. There was no licensing, no fingerprints, nothing, no test. So it's given our business a lot more wherewithal and credentials, that there's a good group of people who are doing it. And we've gone from being 100,000 mortgage lenders. I think there were 182,000 to like under 100,000 mortgage lenders in the United States as of today. And I think that just gives us more credibility. So I'm not embarrassed anymore to be a mortgage person.
And you shouldn't be.
And you shouldn't. And this kind of format helps because we are giving accreditation to your abilities rather than you telling somebody how well you are.
Correct. Third party validation.
Exactly.
Third party validation.
Let's move it now to this has become something for us because we are now working with, because there are people in both of our lives, but a lot in my life, that are in the military. So the military funding, military loans, we've become accredited as military lenders.
That's awesome.
And we did that because we work with one of the top military lenders in the country. That is super important to me.
Top
like
100.
I said, yeah, top 100. And that is no
That
small...
would be Sue?
That would be Sue.
Oh, okay.
Yeah, so
Sue.
we're Success Mortgage Partners that owns Centennial Lending Group is one of the top 100 lenders in the United States for
Amazing.
veterans loans.
Amazing.
And it is amazing, and it's very important to us because we have had many recently people say, well, I'm going to be military VA funding. And I guess about 5 or 6 months ago, I was like, oh boy, they want VA funding. What does that actually mean? How's this going?
It's easy.
Right? And it used to be kind of even this had a bit of
A cloak.
Yeah, around it.
Yeah.
And when you were putting the offer, and it's like, they have VA funding. Is that okay with your seller? You know, I don't see that as the issue anymore.
I don't see that as an issue either. I mean, the appraisers are VA appraisers, but they're virtually the same appraisers that we all use anyway. We don't send a package. Everybody thinks the myth is that we send their package to VA itself. We don't. We're VA underwriting, so we're VA closing, so we do everything for the VA. And I think it's a great product because you don't need to worry about the appraisal. They can have 100% loan to value. In addition to that, there's really, everybody thinks, oh, you have to deal with all the repairs. There are no repairs. It's a regular appraisal. You do need a termite. So that is one of the extra things that you do need in our area. Some areas you don't need a termite, but in our area you do. And I think that it's really illustrates a benefit. And look, these veterans are people who have protected our country and deserve to use their benefit. And only 11% of veterans use their veterans benefit. If you put less than 20% down, you don't have private mortgage insurance. Most of the time, it's a lower than what the average going rate is. And they should be using their veterans benefits.
And if I were selling my house, I would consider it an honor that the person buying it wants to use and has access to.
And we are helping people who defend our country for us because we have it.
I think it's asking the question, so maybe they don't even think of it, or as a benefit that they should tap into. So having somebody like you,
when we qualify
ask.
people, we ask every single person, are you a veteran?
Right.
Do you serve our country? Are you in the military? We ask every single person. It's on our application.
Perfect.
I had just looked up, I just kind of did a little bit of research on it, and they said, one of the quotes I found was, a VA loan is like a special VIP pass for eligible military buyers. It gets you into home ownership with 0 down, no PMI, and great rates.
Yes.
Right? So I do like it. I do like that. I do like that it's considered a VIP pass.
I would say it's a VIP pass.
Yeah.
We're going to use that.
Yeah.
So it is a VIP pass. People should be using our veterans benefits, and it's in no way a negative in any way, shape, or form. And we do them every single day.
And it shouldn't be scary to listing side anymore.
It's not scary at all.
I think in the old days they used to have a lot more as far as
there was a lot more
repair.
I mean, but we're going over a decade ago.
Yeah, unfortunately,
They
I've been around
revamped.
that long.
I want to say that they revamped VA in 2014. Don't hold me to that date. And it is a lot easier than it used to be. And you don't need to. The only time you need to send the package to the Veterans Administration is when you buy without someone being your spouse.
Okay.
So if you buy without someone being your spouse, we do need to send it in for a second signature.
Okay. Okay.
Good to know.
Because we're not giving a full VA mortgage. It's a
100%.
VA mortgage, but it's not that both people aren't veterans.
Yeah.
Okay.
You don't have to do that if there's two veterans that are
spouse.
not married to each other.
Right.
You don't have to do that, but that's a little glitchy thing. Is if you're not married, we have to do it a little differently.
Okay. Okay. Good to know. Okay, so now this. I think I'm going to wrap it with this question,
Okay.
unless you have something else you want us to ask you.
Yeah, it's good.
Funding sources, as opposed to, so you guys are a broker,
We're a banker.
banker.
Mm-hmm.
So funding sources for you are not publicly disclosed, but mortgage funders like CLG typically collaborate with multiple wholesale lenders to secure financing.
Well, that's what a broker does.
Okay, so you guys, can you explain the difference between going into any one of the banks that you can have a brick and mortar and asking them, I'd like to get a mortgage, versus coming to talk to SueMeitner?
Yeah, so there's 3 different ways of getting
Yeah.
a mortgage. You can go into your bank, which is brick and mortar, and you can get their loans or what they sell with their rates. They're depository banks. There's independent mortgage bankers, which 64% of the United States uses independent mortgage bankers. That means that we're mortgage bankers, but we don't have deposits. We're a non-depository bank. So, or you can use a broker. So what a broker does is a broker takes your information, and then what you just said, then they go to different lenders, wholesale lenders, and then they sell your mortgage, and the wholesale lender brings the money to the settlement table and closes the loan. When you use me, which is an independent mortgage banker, which is 64% of the mortgage business, I process, underwrite, close the loan, fund the loan with my own money, not with my own money, our Success
Company's
Mortgage
money.
Bankers, Success Mortgage Partners want money, and then we sell the loan in the secondary market, and we get what's called a service release premium. The service release premium is how mortgage bankers are then paid. Whereas with a broker, it would be on the sheet what they get paid, and then you see a broker service fee. So that's the difference. If when you just go to your bank, when you go to any bank with deposits or non-depository, you'll never see what a bank gets paid for doing the loan, because we do it after the fact. Where if you go with a broker, you will see what they get paid on the sheet.
Is there pluses or minuses to either scenario?
Well, I always laugh that brokers always say they're better, and I always say they're not. So I feel that I would never be a broker, because I always want to have control of the loan. I want to have control of the appraiser. I want to have, and which I don't. You have to have an independent mortgage, but I want to, have control of ordering the appraisal. And then I want to have control of, underwriting, and have a communication with the underwriting. I'm not saying they don't. I'm just saying that they just don't all work in one entity.
In tandem, yeah.
So I would feel like I would lose some control. And then I want to know when the loans fund and close. And that's why I feel being an independent mortgage banker is the way I've been for my entire career. And I wouldn't be a broker ever.
Okay.
So,
Do you think it gives you more flexibility and this control
I think
thing?
that everyone thinks that what they do has the most flexibility and
course.
control, but I feel that to do right for my client, I want to be an independent mortgage banker, and that's what I feel is in my heart, and I can only do what is in my heart. So that I don't believe in the mortgage broker.
Whatever you're
entity.
doing, it's working.
Right.
I don't believe in the mortgage broker entity. I'm not saying that they're better or worse. I'm just saying that I just don't
Not for you.
feel that it would work for me, and I don't feel it works for my clients.
Okay.
If I did, I would do it. I feel that I feel like mortgage people feel they make more money being a broker, when I feel like, look, here's the thing. There's only so much of the pie that needs to go around. Even the people who are a broker at times, we're all making the same amount of money. Like, with a broker, they have to pay out their taxes, they have to pay out their insurance, they have to pay for their processing, they have to pay for everything. As what I do, I'm with a banker, I don't pay any of that stuff. I get paid whatever I get paid, it's a salary or bips or whatever, and then I have to be happy with that, with the way that I've negotiated. I've owned my own company. Being a small broker just isn't what it's cracked up to be, in my opinion.
Okay, that's fair.
Yeah. So I think being an independent mortgage banker is, the best for the client. And obviously, since 64 to 67% of the United States all use independent mortgage bankers, they also believe that to be the case. And it is interesting that people don't understand the difference between bankers and brokers.
Yes.
And it's people, and I do say that all the time. There's 3 ways of getting a mortgage. You can go with your bank, which is a depository. You can go with an independent mortgage banker, which is a non-depository bank, or you can go with a broker. So that's easy. So here's the thing. You flip the questions on me. Let me ask you one quick question to both of you. What do you feel your 3 keys to success are? I mean, you guys have an amazing real estate business. You're a rock star team. You get 2 for 1, which is amazing. What are your 3 keys to success?
I think being open to other people's needs. You have to be flexible enough to listen, which I think we do. You have to be, as we've already touched on, have the connections with other people that you can say, okay, I'm not the person for this, or this is the great place to go, this is the hairdresser you want, whatever it might be. So I think communication is key, and we always respond quickly, or in whatever format that person wants, whether it's phone, text, or whatever like that. So I think communication is huge. Being truthful. I mean, if somebody says to me that this is the value I want for this house, and I think there's no way you're going to get it, I'd rather disappoint you right at the beginning, than buy your listing and then in 6 weeks say, well, you know what, probably we have it overpriced or whatever. So I think being truthful throughout the process builds confidence. So I think that's huge. So communication and truthfulness. I don't know what else there would be. I think those are my big 2.
Okay.
So for Faye and I personally, to answer that question, so I'm not going to answer it as an umbrella, I'm going to answer it me. Choosing the right business partner has changed everything.
Right.
We are polar opposites. We are yin and yang, zing and zang, however you want to call it. Faye's strengths are my weaknesses, and my strengths are Faye's weaknesses.
100%. That's 1,000% great.
At the end of the day, you get the whole package. That makes us more successful.
Right.
One thing that we do agree on totally is integrity. So Faye sort of articulated it in a more words. It's just that. We both feel we have to sleep at night. And there's only one way we're doing that, and that's if our day is filled with integrity and ethics.
And
Right.
fun.
And fun.
It's
fun.
a very
Yeah.
It can be, as an industry, it's a very lonely job, because just like a lawyer, I think you have fiduciary. You can't go talking about your clients, and not would we. So having the 2 of us, we were able to bounce ideas off of each other to service our clients.
Right.
And have fun doing it. And I think our clients appreciate the fun
And
side.
I think that it's great that you guys do it together, because if you guys did it by yourselves, you would be isolated and on an island.
Isolated, and there'd be a huge piece missing. Like,
Right.
for both of us, there'd be a huge
Right.
piece missing.
Why do you think? Why do you think teams work for some people and teams don't work for other people?
As in realtors or in clients?
Realtors.
Realtors. I don't know.
I mean, I think it's because if you're a solo agent, you never tried a team, or you didn't find the right person.
Right.
So my background with real estate was that I was in management and admin in the office
Right.
for a number of years. So I had a chance to watch from the other side.
Right, which is invaluable.
It was invaluable. It was when I was going to transition from in-house all day, every day, to being in the field, because it looked like fun, and just for all the reasons, the people that were struggling the one answer that would have made their lives better in every way is if they found a partner, somebody to do this with, be it a big team, a small team. I don't have opinions on, whether you need 10 or 12 or 2 people. We have 2 people that are Evans Clayton group, and then we have a huge support system in our lenders and our vendors and all that. But I don't know in any world where being a solo agent, unless you build your tribe. I talked to a really, really productive agent, great top agent in our office recently at a training. And she agreed too. She's a solo agent, but she's really busy with like the Pennsylvania Association of Realtors and all the things. She's built a tribe in a different way, but she said if I didn't have that, it would be too lonely for me too. So I don't.
It's finding the right person.
It
as
is.
Well. Like I said, we are completely opposite, but we have fabulous strengths that we are able to use for each other.
Complement each other in that.
But I think also you're a salesperson, so maybe there's some misguided consideration of I don't want to share what I've got, which is so limiting. Instead of the open hand, it's the closed.
Right.
So when you open, it builds.
Well, that's part of the communication and learning that you spoke of being one of your keys. It's so important to be open and not be scared that someone's going to do it better than you or take from you, that you're owning, you both are owning who each of you are, which I love, and what you're good at and what you're good at. And that gives your clients such a phenomenal team. And, I love that.
We both get dopamine from this job.
Yeah.
So dopamine is the opposite of burnout, so as long as you're still getting up and it feels more like this is what you enjoy doing,
the better. Yeah. I love that. Well, thanks so much for spending time. We have now a 2-part series, so that's super great. And
our first podcast ever. We ran over time,
which is
shocking.
so great.
Yeah.
So I love doing business with you. Thank you so much for being here. Everyone, if you liked these 2 segments, please like it and share it, and we look forward to seeing you next time on Grab Your Keys.